For more than a decade, savings accounts offered little to no interest, making it near impossible to keep up with inflation. But in recent years, the tides have turned, if you know where to look. If you have extra cash on hand and want to start an emergency fund or a nest egg, which by the way everybody should have, a high-yield savings account can be a great option, providing an easy way to build your savings with virtually no risk. Hi, my name is John Gigliello, and you are listening to Invest in Knowledge, a podcast about all things financial. After a life-altering health issue at age 39, my calling in life became clear: to share my knowledge of personal finance with people who are looking to make smart and responsible choices with their money. Only through education, action, and accountability can you build the confidence and security you need to live a satisfying life. Today I'm going to talk about high-yield savings accounts and how you can take advantage of the relatively high interest rates of the past 2 years. The content for this podcast episode was derived, in part, from a recent Wall Street Journal article on this subject. Now, high-yield savings accounts have been providing some of the best returns on cash in years, and with inflation still above the Federal Reserve's 2% target, savers should have at least a few more months to enjoy generous interest rates, the Journal reported. But the bounty will not last forever. When the Fed starts cutting its benchmark federal funds, rates on savings accounts should decline as well. Wall Street observers now expect rate cuts to begin in September or later. Until recently, the prevailing idea was that cuts would begin early this summer. Even though good rates are available now, many savers continue to earn meager returns. The average savings account pays just 0.45%, according to the Federal Deposit Insurance Corporation. But with a little legwork, you can do far better than that. Some savings accounts offer an annual percentage yield, or APY, as high as 5%, a rate that's especially appealing considering inflation hovering around 3%. Taking advantage of higher rates could mean as much as a $500 a year gain for every $10,000 you have saved. Michael Fink, professor of wealth management at the American College of Financial Services, told the Wall Street Journal, "If you're not paying attention, you're leaving a lot of money on the table," he stated. Now, choosing the best savings account for your needs involves looking at more than just the advertised rate, though. You need to consider how you plan to use the account, how you prefer to bank, and how much you plan to keep in savings. So what is a high-yield savings account? The account most of us use on a day-to-day basis is a checking account, a great option for money you plan to use for everyday expenses. Many checking accounts make it easy to perform cash management activities like bill paying and budgeting. A savings account, on the other hand, is a place for money you don't expect to spend right away, but want to keep accessible if the need arises. Many savings accounts limit the number of withdrawals you can make each month and may assess a fee if you go over that limit, so you don't want to use a savings account for everyday expenses. While lots of banks or credit unions like to market their products as high-yield savings accounts, the APYs can differ by a percentage point or more, so it is important to compare rates. So again, the APY, or annual percentage yield, that you can earn from the most competitive online savings accounts has climbed sharply over the past year or so. Today, you can find a handful of accounts in the 5% range, and there are dozens with APYs of 4% or higher. The most competitive offers tend to come from online banks and credit unions. These institutions have lower overhead than traditional brick-and-mortar banks, which allow them to offer higher rates. Banking experts also say it's worth checking out smaller banks and credit unions that have regional rather than national footprints, because these institutions depend on consumer deposits more than their larger counterparts. How do you choose a high-yield savings account? Well, when looking for the best high-yield savings account, you will obviously start with the interest rate. But there are other considerations, including the hassle of moving your accounts. Since interest rates are variable on savings accounts and CDs and will eventually decline, you should make sure you're happy with the bank overall before making a move. Consider, for example, whether the bank allows you to conduct business in person or only via an app. Trying to manage your money via an app on your phone screen might be frustrating if you really prefer to just walk into a branch to ask a question. A great rate can also become a lot less appealing if there are numerous fees eating into your earnings. If you plan to use a high-yield savings account to hold part or all of your emergency fund, then you should make sure your new account allows you access to those dollars if you suddenly need them. Some banks advertise high savings APYs, but always read the fine print. Some banks require you to maintain a high balance or charge monthly maintenance fees that negate some of your interest income you earn. And some savings accounts are tiered so that only part of your balance earns the top advertised rate. Also, make sure it has FDIC insurance. It's very important that you make sure that the bank you entrust with your savings is a member of the Federal Deposit Insurance Corporation, that government agency that protects customer deposits if a bank fails. The collapses of Silicon Valley Bank, Signature Bank, and First Republic Bank in March 2023 highlighted just how important that is. Now, FDIC covers deposits up to $250,000 per bank, per depositor, and per account type. The proliferation of online banks that offer banking services can make it tough to determine your coverage. Some high-yield savings accounts are offered by online brands of brick-and-mortar banks, so it is important to check the name of the parent institution. For instance, if you have one individual high-yield savings account with a traditional bank and a second one with that bank's online brand, your FDIC coverage limit would be inclusive of both accounts. If you open a high-yield savings account at a credit union, make sure it belongs to the National Credit Union Administration, NCUA, that government agency that oversees credit unions and offers equivalent deposit protection to customers. Typically, institutions display their membership in the FDIC or NCUA on their websites, but you can also check on the agency's respective websites to verify their participation. So there you have it, a brief overview of high-yield savings accounts. As always, if you have any questions about this topic or any financial matters, please don't hesitate to reach out to us here at Albany Financial Group. Of course, we always encourage you to take part in the financial planning process to pursue a confident financial future and, in turn, feel optimistic and proud about your accomplishments. Knowing that I've provided education and a plan for my clients has allowed me to turn my own personal challenge into a gratifying journey. Stay tuned for our next episode of Invest in Knowledge. Thanks for listening, and make it a great day. John Gigliello is a registered representative with, and securities are offered through LPL Financial, member FINRA, SIPC. Investment advice is offered through Private Advisor Group, a registered investment advisor. Private Advisor Group and Albany Financial Group are separate entities from LPL Financial. This material is for general information only and is not intended to provide specific advice or recommendations for any individual. Individual tax and legal matters should be discussed with your tax or legal professional.